Hey everyone, welcome back to the Deep Dive. We're here to do the heavy lifting for you, slicing through the noise of recent earnings calls to grab the most important insights.
That's right.
Today we're taking an in-depth look at Guidewire's fourth quarter and fiscal year 2025 financials. And look, this wasn't just another call. It really seemed to hit a nerve with the market, sent a powerful signal.
Definitely.
Our mission today is, to uncover not just what happened, but why it matters, and what this whole accelerated focus on cloud and AI means for the future of the P&C insurance world.
Yeah.
And for you, thinking about investments.
Exactly. We'll unpack those pivotal numbers, the ones driving all this excitement. We'll dive deep into management strategy, especially around cloud and AI. And talk about the implications for insurers trying to modernize and really for anyone watching this critical software space.
Okay, so let's cut right to the chase, the numbers. Guidewire didn't just meet expectations this quarter, they pretty significantly beat them. Non-GAAP EPS, that's earnings per share, came in at $0.64. Consensus was looking for $0.63. Quite a beat.
Yeah, a really strong beat. And revenue was just as impressive, $356.6 million. The street was expecting around $337.9 million.
Wow.
So comfortably ahead. And that's a robust 22% year-over-year jump. It shows real acceleration. It wasn't just a minor beat. The size of it suggests they're really executing well.
Okay, and here's the big one, the headline everyone's talking about. Annual recurring revenue, ARR, it crossed a major milestone, psychologically, financially huge, finished the year at $1.032 billion. That's up a remarkable 19% on a constant currency basis. So taking out the exchange rate noise, breaking that billion-dollar barrier, that's massive, isn't it?
It absolutely is. That billion in AR, it's not just a number. It really speaks to the long-term predictable revenue they've built, shows how sticky the platform is.
Right.
And the strength wasn't just in one spot. Subscription and support revenue up 33% year over year. License revenue grew 5%. And even services revenue jumped 20%. That kind of broad strength really underlines how healthy the business model is right now.
Okay, so let's peel back the layers a bit. Let's explore what's truly driving this momentum, beyond those impressive top-line figures. Because the underlying metrics, they tell an even more compelling story, I think.
Indeed. What really stands out is the growth in fully ramped ARR. Now, for those deep diving with us, that means the full annual value of contracts once they're running at full steam, not just starting out.
Got it.
That grew an even more impressive 22% year-over-year constant currency. That points to substantial future revenue already locked in. And the cloud story. It just keeps getting stronger.
Yeah.
Total cloud ARR surged 36% year-over-year. And get this, it's now 74% of Guidewire's total ARR. That's a definitive signal.
Yeah.
Their cloud transformation isn't just working, it's accelerating.
And it wasn't just a strong Q4, right? The whole fiscal year, 2025, closed strong too. Total revenue hit $1.22 billion. Subscription revenue alone was $667 million. That's up a staggering 40% year over year. And their subscription and support gross margins finished at a healthy 70%. Actually ahead of schedule, they said.
That improved margin profile, that's key. And you couple that with operating cash flow ending at $301 million for the year, that's a 25% cash flow margin, shows how efficiently they turn revenue into actual cash.
Right, efficiency.
And they're sitting on a robust $1.48 billion in cash and investments. It all points to solid operational discipline, and real financial flexibility. This isn't just a flash in the pan, they're building for sustained profitability.
Okay, here's where it gets really interesting for me. The CEO, Mike Rosenbaum, he highlighted an outstanding fourth quarter, talked about executing 19 cloud deals, surpassing that $1 billion ARR mark.
Yeah.
And he stressed demand for Guidewire Cloud Platform is strong and continues to grow, called it a record quarter driven by deal volume, deal size, and a milestone win for our company. That phrase, milestone win, really jumped out.
Certainly did. And that milestone win was a big one. A 10-year strategic partnership with Liberty Mutual, a major tier 1 insurer, so one of the absolute biggest players.
About 10 years.
Yeah. The deal involves migrating their existing on-prem claim center and adopting Policy Center on the Guidewire Cloud platform. Look, this isn't just another contract. It's seen as one of the most strategic partnerships in their history. A massive validation of their cloud maturity, their ability to handle the biggest, most complex clients. It sends a huge message to the rest of the industry.
And what also stood out was that record low ARR attrition rate for the fiscal year. That stickiness, that's like gold in enterprise software, isn't it?
Yeah.
How tough is it to keep that churn so low? And what did they say was behind it?
Oh, it's absolutely critical. And yeah, it speaks volumes. Management basically put it down to an intense, almost obsessive focus on customer success,
Yeah.
making sure implementations are high quality, being proactive with customers. They also mentioned a lack of major M&A hitting their customer base, which sometimes forces consolidation and churn.
Right, M&A can disrupt things.
Exactly. So it really underscores the power of a well-supported platform. When customers have good project outcomes, they stick around, builds immense trust.
And it's this solid foundation, this execution, that's letting Guidewire really lean into what they're calling their Act 3 strategy. Can you maybe set the stage? What were Act 1 and Act 2, and why is this Act 3 such a big deal?
Yeah, think of it like this. Act 1 years ago was building the core platform, becoming the leader in P&C software, basically setting the stage.
Okay.
Act 2 was the huge effort recently, migrating that vast customer base to the cloud, getting everyone onto the new stage, if you will.
Right, the big migration push.
And now, Act 3. That's where the real performance starts. It's all about using data-driven analytics and, importantly, AI to unlock totally new value for insurers, moving beyond just core systems to, well, intelligent operations.
Precisely. And this new NISACO cloud release, launched in August, sounds like part of that, adding financial and risk insights, AI-assisted analytics, making the platform stickier, more upsell potential. But, every tech company talks AI these days. What makes Guidewire's approach genuinely different here, especially for P&C?
That's a fair question. I think their uniqueness comes from where they sit at the intersection of a massive industry-specific data set and this deeply integrated cloud platform. They aren't just like slapping AI on top. They're weaving it into the actual insurance workflows. And if you connect the dots, they're investing heavily through acquisitions like Quani, that's for modernizing pricing and boosting their industry intelligence for predictive models and claims. It's about creating an AI fabric across the whole suite.
So looking ahead, what does this really mean? This aggressive move into AI and data for Guidewire, for the industry?
Well, Guidewire sees a unique strategic position for generative AI specifically. They think they can leverage their cloud platform, their huge installed base, to improve efficiency in those less structured workflows. Think complex commercial underwriting.
Okay.
And they're even looking at how Gen AI can speed up their own internal software development, which means faster innovation for customers and streamline how customers actually deploy the software. So AI for insurers, but also AI to make Guidewire itself better.
And they're not doing this in a vacuum, right? They're ecosystem partners, integrators. That seems crucial, and it looks like it's thriving.
Absolutely crucial. The system integrator community, the SIs, who help implement the software, grew 11% to over 27,000 people. And importantly, a 24% increase in cloud-certified consultants. That's key.
Yeah, cloud skills matter.
And their tech partner ecosystem grew too. Over 300 third-party apps now on their marketplace from over 200 partners. This open platform approach, kind of learning from other successful marketplaces, just allows more innovation, more customer choice, makes the whole platform stickier, more valuable.
So looking forward to fiscal 2026, the guidance they gave sounds pretty optimistic too, suggests this momentum continues.
Yes, very much so. For FY26, they're projecting revenue between $1.385 billion and $1.40 billion. Non-GAAP operating income expected between $259 and $279 million.
Strong numbers.
Yeah. And they expect ending ARR between $1.21 billion and $1.22 billion. That's about 17% constant currency growth at the midpoint. And operating cash flow projected to step up to $370 million. Shows continued financial health, increasing profitability.
And notably, they expect subscription revenue to hit around $888 million, 34% growth there, while license revenue keeps declining, down over $30 million expected as more customers move off-premise to cloud.
Exactly. That clearly reflects the ongoing shift. It's not just happening, it's accelerating. That fundamental business model transformation to predictable cloud subscription.
So, okay, let's step back. What should an investor take away from all this? Guidewire's journey. It really feels like it's entering a new, maybe more exciting phase, not just business as usual.
No, definitely not business as usual. I think this quarter really reinforces the idea that Guidewire is firmly in a monetization phase now. After years of that heavy lifting, replatforming to the cloud,
Right.
Now we're seeing that higher mix subscription growth kick in, AR climbing, operating margins expanding. And this Act 3 focus on analytics and AI, that's becoming a real competitive differentiator, setting them apart. We're seeing an elevated level of durable ARR growth compared to history, suggesting this isn't just a one-off quarter.
You mentioned a key differentiator is minimizing project failure risk for customers. They see that as the biggest barrier to modernization. How exactly do they do that? Beyond just saying robust platform, what are the mechanics?
That's a really critical point. It's baked into how they operate. It's not just the tech itself, but their, frankly, vast experience. They have best practices from hundreds and hundreds of deployments, plus that certified SI ecosystem we talked about. They offer structured implementation methods, pre-built integrations, constant platform updates. It all works to de-risk these huge projects. They've basically seen it all, right?
Yeah, experience counts.
So they can guide customers through these complex transformations with a much higher chance of success than maybe a smaller, less experienced vendor could. That reduction in the fear factor for insurers, that's a powerful sales tool.
What about macro trends, like premium growth in the insurance industry? Does that directly flow through to Guidewire's top line, or is it more nuanced?
It's a bit nuanced. While premium growth is generally good for Guidewire, the direct impact on their revenue can be complex because of how contracts are structured, often giving customers price certainty for a time.
Okay.
But what it absolutely does is incentivize insurers to get really sharp on pricing and underwriting efficiency. And that drives strong demand for modernization, for Guidewire solutions. So the underlying need stays robust, even if the revenue link isn't always one-to-one immediately.
They're also seeing strong Tier 1 momentum. Is that just a year-end thing, big deals rush to close before the fiscal year ends, or is there more substance?
According to management, no, it's not just a year-end rush. They said the Tier 1 momentum comes from deep, long-term solutioning work, aligning with customer budget cycles, which are often multi-year.
Makes sense.
They also noted that AI adoption will probably look different across tiers. Smaller insurers might rely more on Guidewire's ready-made AI products. Bigger insurers might build some AI in-house or work closely with Guidewire to customize things, highlights the different needs out there.
So for listeners tracking Guidewire or just this whole P&C software space, what should we be watching for next? Any key catalysts coming up?
Yeah, a couple of things. Guidewire speaking at the Goldman Sachs Communacopia conference on September 9th. Might get some more color there on pipeline, maybe cloud attach rates.
Okay.
But the bigger one is probably their Connections user conference in October. That's where they usually unveil the bigger vision stuff. Expect more details on data, analytics, AI. That could be a major stock driver if they impress.
Right.
For investors, the watch items are pretty clear. Execution against those FY26 targets they just set, the quality and length of new deals they sign, and just the continued speed of cloud migrations. That's the real test of whether this momentum holds.
All right, perfect time to transition. It's time for our This Is Not Financial Advice segment. We get a little speculative, toss out a plausible, maybe slightly outrageous trade idea.
Okay, let's do it. Given Guidewire's accelerating cloud move and how they seem to be attaching more data and analytics to deals, here's an idea to chew on.
Maybe a long-dated, out-of-the-money call option spread on Guidewire itself.
Okay, interesting. And the catalyst, what makes you think that might play out?
The thinking is a potential price surge after that Connections conference in October. The bet is that management unveils some really disruptive AI-driven stuff, things that show they can monetize Act 3 even faster than people think.
Ah, the AI kicker.
Exactly. Something that could lead to a significant re-rating of the stock if the market really buys into the scope of their innovation. And for a pairs trade, something to potentially hedge or amplify that bet.
Okay, so simultaneously, you could consider a short position on a, let's say, legacy, mostly on-premise insurance software provider, one of the older guard.
Right.
The idea is that Guidewire's success, especially pulling over big tier ones like Liberty Mutual, just speeds up how obsolete those old systems become. It gets harder and harder for those legacy players to win new deals or even hold on to customers, especially when Guidewire keeps making migrations less and less risky, as they put it.
So Guidewire's innovation versus legacy vulnerability.
Precisely. That convergence, Guidewire's accelerating innovation cycle, and the increasing threat to the old guard, it creates a potentially compelling, though definitely speculative, pairs trade.
Okay, so let's wrap this up. In summary, Guidewire delivered, well, a stellar quarter. Strong beats on EPS, revenue, crossed that huge $1 billion ARR threshold, and they gave a really confident, pretty aggressive outlook for fiscal 2026. Feels like a company hitting its stride.
Exactly. Their strategic focus, cloud migrations, AI innovation, building out that ecosystem, it's clearly paying dividends, cementing their leadership in the P&C software market. They're shifting the narrative, moving from just modernization to really intelligent operations.
Absolutely. Now remember, everyone, this deep dive is purely for informational purposes. It does not constitute financial advice. Always, always Do your own homework, talk to a professional before making any investment decisions. But what stands out to you from Guidewire's latest call? We'd love to hear your take.
Yeah, definitely share your thoughts. Thanks for tuning in to the deep dive, and we'll catch you on the next one.